Welcome to TradeTheMBI.com. This is John's Reporters for the 8th of May. Doing better after having some kind of food poisoning or just something that did not agree with me the other day. It's one of those things that just really hit me hard. But what is striking some people is even more dramatic is the fact that we're over 2,900 on the ES, despite some of the worst economic readings we've ever seen. And it's interesting because you had the greatest economy and the worst economy all within the same year. That's just mind-boggling. However, the Fed has stepped into the game on the dip down, and like we've talked about, despite what you see, that unlimited purse allows them to continue to set levels, and it's just a matter of knowing and seeing them and going off what they suggest. And what we had here was our rising gold within this brief setback, which was a week period, that was getting some nice movement. But then we had the Azure, and once it was met, that became the key area. But it met on positive and rising shakeout, and with the rising blue below it, that's continuation. And also we talked about this as well, falling 100%, price wants to be pulled up towards that, so whichever one depends. Will price get there faster, or will this 100% decline quicker to catch up to the rising new highs? And so this is a reflection, though, of, like I've talked about, the way the market views valuation. It's not just about what the company is earning, it's also about what they believe the value of a dollar will be, and whether that 2,900 is worth far less on a devalued dollar in general. And that has an impact. And this is why some people are having a hard time understanding how the market can rise in such horrible conditions. But when you have a backstop of the full faith and credit of the U.S. government, you're pretty much free to do it. And there's a lot of other catalysts that we can look at that will explain why this is taking place. Now, the NASDAQ clearly has been outperforming because you can see it's already taken up the previous highs. And that's a reflection of the online impact and the tech-related nature of consumer shifts. And so that's having a significant move. Now, everyone always thinks that you're going to have massive inflation in that with the amount of money that's being created from nothing. But again, it's not being created as an adjunct to the already existing. It's being used to supplement regular income. So there's almost no differential in the amount of money that's actually being spent or whatever. And in fact, looking at the euro, you would think that it would be, plummeting even further, but this is part of that dollar devaluation, that the euro is even above parity, given the dismal condition of the EU. It's far worse than anything that's going on in the U.S. And again, right back in the same ranges that those, central banks have agreed upon and holding up just fine. Should it be? Well, these are all, I've heard that one before. Well, the market's overvalued. Well, overvalued to who? If it keeps going up, it's not overvalued. If it keeps dropping, it's not undervalued until you reach a point at which, the assets are worth more than what it trades for. And this is also a perception thing. This is the whole point of the multiples. When we see oil, this is what I'm talking about when it comes to why you're not seeing inflation with all this amount of money being thrown into the, liquidity of the markets and that's simply because there's no pressure to the upside. With oil, as long as it stays below this 23% line and this 23% line continues to decline, there's no real monetization of any of this new money that's being created. Most of it's being given to people who are just spending it as regular income. And then we even saw new reports where everyone was expecting, people were going to be binging on credit cards to save themselves. What the reality has been, record pay down in credit card debt. So paying down debt isn't certainly going to monetize any of that money. It just puts it back into the banking system, which means it's not going anywhere. And that doesn't create a problem yet. It's not until things actually turn around. And then the question will be, can the Fed suck some of that money out as they tried to before when they eased off of the quantitative easing, and will they be able to suck up the supply? So those are things we're going to be looking at, and we're going to see it because it'll happen in commodities supply, pricing, and that. And when you had the important one was the implementation of the Defense Production Act when it came to poultry and meats. Because if you had started seeing food commodities rise, that would have been problematic because it really would have driven real inflation, which is what people actually pay for things. And when you're not paying a lot for gas, and if you start to see the increase in usage and stuff like that, and it still maintains a low level, it can be supported. There's plenty of justification for it. I don't know why you hear a lot of people say, "Oh, this is unprecedented." Well, it's a larger degree of what we've seen, but it's similar practices, so it's not out of the realm. However, that devaluation is going to show up in a commodity like gold, which is used as a standard of stored value. And that's why we expect gold to continue its rise. It's not going to fade off much. You might just get various fluctuations in the general demand, but it's still poised to move in one direction, which would be mostly to the upside. No question about that. Now, from an intraday standpoint, you can see where we're at right now. New highs, but again, we're right between these same ranges. So if we just scroll back to the beginning of the day, and we talked about it, we were between this bottom range of the 28.30. Once we got to the new plateau, based across it a few times at the 47 range, reached the next level where it paused at the 56, and then from there it was takeoff off that lovely Sigma event, and then we kind of just pretty much stayed right above that 13 level until we started to see some breakdowns, and then we got a little bit of a micro event there, came in with our Nikkei signals that were taking place, and the shakeouts started breaking down to negative. It was the only negative we really saw for the most part. We had dipped below the red line, which meant we were going to retrace it even on the uptick, which we ended up getting a nice solid round base right there. Uptick came. Didn't quite have a dip below the white line, so that led me to believe that we would see a pop, but it would likely come back to give us that test, and sure enough we did. And then we moved across a little bit further, same situation, another spike with the up, that took us back to the highs, and right at that resistance of the 92 level. Well, we scrolled across, and then we ended up with a Sigma event on a short move, took a few bars before it actually finalized, and that took us all the way back down to the lows, but still above that previous algo level, but consistent with the positive extremes that were created. That took place all the way through there, and those were filled, and they just kind of let it fade. And then there was a basing, and this is the accumulation factor. No DOC still reset going through there, but you had finally the dip below the white line, took place right in the middle here, continued until we ended up with a solid up pivot of the power mo, and then that signaling factor, so you have the signal and the trigger of it where it popped up and still went across right there until you ended up with a little bit more of a uptick with the Sigma. It was kind of a small one, mostly fade of shorts in that case, and that led to the spike that we see right now. So all in all, pretty effective stuff. I think that the ranges are still excellent, so you're still seeing plenty of movement between the different sections of positive extremes that are giving us our algorithm indications, and just play with what is. So there's been room to the downside, room to the upside. That's all perfect. I think the colors kind of reflect how clean that can be, and it's just a matter of taking advantage of that. So that's the long and the short of it. I'm going to increase the length of this video just a little bit. I wanted to cover a couple little programming things that might be helpful for some of the members working with our functions who are writing some programs, so they can see some language that can be used to make it effective for all the different function categories that we offer. So this will conclude the basic part. As always though, trade well, and we will talk again later. So I thought I'd take a moment to go over some interesting little things you can do with some of the functions that we've created. I know some people were looking at wanting to create some programs, and I thought I'd point out some of the different things. So in this particular case, this is a super simple one that, this has nothing in it, but you have an inputs, and I put total contracts. This allows you to adjust how many contracts you would want to trade within it, and it makes it an input, so you can adjust it as needed. And then we just put goodbye as a variable. Now, there's a couple of different ways you can buy. Now, in this particular case, I just put buy, and I named it the MBI, and then the total contract, so it would then do 10 shares, this bar close. Simple enough. And then you can create an alert and just call it the MBI, and that will give you an alert signal at that particular point. You can then sell from that same entry with the name, the number of contracts. Now, in this particular case, I just wrote here the MBI limit. Well, you can specify if there's a limit price you want to create for it. I think that using, in this case, the get app info, where you're able to call how many contracts you have in existence, and whether or not and how you want to sell them, all those things can be done in the advanced order setups, and you'd have to look into that because it can get a little bit complicated. Another simple one is buy, like in this case, the Momo, which you see on there, just the total contracts, next bar at the market. Now, I find that market orders in some of these situations are best simply because it guarantees that you're going to get filled. Because the worst thing that can happen to you is get a partial fill and then a sell that takes place where only part of that one is sold, and it can really mess things up if you don't have all of those configurations covered. So I just wanted to give couple of those options so that you could see them. We're going to go ahead and bracket this out, and what I did down here was I actually created just the simplest. So I used the function DOC cyan under DOC red because we always consider that a buy. So if you have DOC cyan is less than DOC red, then goodbye is equal to 1, otherwise it's equal to 0. And in this particular case, market position is used for back testing. You'd have to have a different configuration if you want it to actually be an actual trading vehicle, because this is supposed to be used. Now, anytime you want a definition for these, you can just right-click them and click the definition for what market position. So it just basically says that if we don't have a position and goodbye is equal to 1, then go ahead and begin. And so in this case, buy total contracts, which is the 10 for the input right here, this bar close. And then it sends you the alert. And then on the opposite side, if the market position is 1, so meaning we actually have an entry, and in this particular case, market position is either a 1 or a 0. If you have more than one position, it's not going to read 2, 3, or 4. It's just going to read 1. And then in this case, the BK signal, which is the break, sort of like a combination of the magenta, but you could certainly use the magenta candle construct. If that equals 1, then you're going to sell from that same entry. And in this particular case, up here at the top, you can see that you can just include the little check mark, or you can hit F3 to verify the study. And in this particular case, what it looks like is something like this, where it buys, because the cyan went underneath the red, and the BK signal happened right there, so it's sold, effectively it's at the close, but really it's the beginning of the next bar's open, which is the same theoretically consideration, assuming you don't have a large gap. I mean, even doing something as simple as this, what did it even produce? It produced a 1.22 profit factor, and what's the problem with that one is that you don't always have a PK signal when it comes to a sell on those. So there's a whole other variety of different things that can be associated, but I just wanted to give you a simple way that you can use some of these functions, because we can identify every single line. So you can go through and say, okay, hey, if I've got an orange candle and, we've had a DOC reset, which are other considerations that you can put into it, from rising shakeout, as well as power mode 2 readings. All of these lines are available as well. You can pretty much create any configuration and or go through and just create new studies that maybe even I haven't gotten to. And that's an effective way to produce quantifiable setups that will allow you to pick different ranges. You can then also make additional variables with them, depending on what the output of those readings are. Now, I normally wouldn't leave the DOC cyan and that and use those as regular. What I would do is I would call them and assign them new names. So what I usually will do is I'll write something like this: DOC cyan is equal to, and then put in the actual function name. And then all you can do is make that a variable up here that's just DOC cyan. And this just makes it, actually that's got to be a comma in between them, and then making it a 0 like that. And if you do that for all of them, then what it does is it just reduces how much work is doing in calling functions. That way they're just immediately available. It's just defining them. So the program will typically run faster in that particular case. Not that it's that big a deal if you're working on a 10, 15,000 K chart, but if you're getting into smaller time frames, it would make a difference. So I just thought I'd throw that one out at you so that you could see it and be able to create it, because I know that some people were looking at playing with those kind of functions. I thought that would be just a neat way to explore different opportunities for you, and can always produce something great for the community. As always, be on the Skype chat if we want to talk about these things, and we can go from there. Trade well.